What's good, YouTube? Welcome to another Learn, Plan, Invest video. My name is Evans, and today I'm going to show you guys how to stay consistent in the stock market with using moving averages. Before I get started with today's video, if you're new to the channel, subscribe and hit the bell notification for future videos. And today I'm going to be using the platform Thinkorswim. They're one of the easiest platforms out there to learn. Let's get started with today's lesson. There are two time frames that I use with 4 moving averages. The first time frame that I use is the weekly time frame, and the moving averages that I'm using are the 10 EMA with this blue line, the 21 SMA with this gold line, and I have some long-term moving averages, which is the 150 EMA and the 200 SMA. Now, there's no particular reason why I chose those numbers. Well, there is. I'm comfortable with those numbers because I've done some back testing and those numbers seem to be more consistent to me, and it gives me confidence with my trading. Now, you can use any length with these moving averages. It's just you have to find the right one that fits your trading style. These are mine that fit my trading style, so that's why I'm presenting them to you guys. Now, there's a few things I'm looking for on the weekly time frame before I move on to the daily. The first thing I'm looking for is my 150 EMA to be above my 200 SMA. When I have that matching, I look for price action to be in an uptrend, which we have here, higher highs and higher lows being made. Now, I want price action to be above my short-term moving averages, which is again happening right now. Price action is above the 10 EMA and the 21 SMA. Now that I got all of those things verifying my uptrend, I move on to the daily time frame. Now, on the daily, I'm looking for the same things that I found on the weekly. My 150 to be above my 200 and price action to be making higher highs. I use these moving averages on the daily time frame, well, my short-term moving averages, to enter into the market. First, I want to see a pullback below the moving averages. Then I want the moving averages, I want my 10 EMA to cross above my 21 SMA. Once I get that, I want price action to break above the moving averages, then retrace to the moving averages to see if it can hold as support. Now we get that, I'm looking for an engulfing candle or a bullish candle letting me know this is the okay time to go long. And a good example would be here. We get a pullback below the moving averages. Then price action broke above the moving averages and the 10 EMA crossed above the 21. Price action then came back to retest the moving averages, held as support, and gave me a bullish candle signal here on August 7th. Once I got that candle, that's when I will place a trade to enter the market. And after that entry, the very next day, the stock market went up $5. Now, not every trade is going to do that. Some of these trades are going to take time to reach your destination. And sometimes they're going to do exactly this. Shoot up straight into your take profit. Now let's move on to the next example. Western Union. Now, Western Union was a really good stock in 2019. Now, first thing I'm going to do is check my weekly for analysis. We have my 150 EMA above my 200 SMA. Lets me know, all right, this trend is healthy. Then I want price action to be making higher highs and higher lows, which we have here. And now I want price action to be above my short-term moving averages, which is my 10 and my 21. Everything checks off. Now I move on to the daily to see if I can find a really good entry point. And once again, I'm looking for the same thing on the daily. 150 above my 200, price action making higher highs and higher lows. We get that. Now I'm looking for a pullback below my moving averages. Then I want my 10 EMA to cross back above my 21, which we get here. And price action to break above, retest the moving averages. Sorry, I'm going to remove these trend lines that I have placed here. So now I want price action to break above the short-term moving averages, then come back to retest, hold as support, give me a bullish candle, let me know this is probably the okay time to go long, and that's when you would place your trade and expect the market to go long. Now see, here's another example here. This trade took 19 days just to move up $2. The other stock took less than 1 day to go up $5. That's an example of not all trades work the same way, but if you have a sound system, you can be profitable. If nothing in the weekly is telling me that this stock is in a strong uptrend, I won't even go to the daily to find a spot to get into the market. I will just leave that stock alone and find another trade. Let's move on to the next example, ticker symbol SO. Once again, I go to my weekly, look for my 150 to be above my 200, check. Look for price action to be making higher highs and higher lows, check. Price action to be above my short-term moving averages, check. Alright, everything looks good on the weekly. Move on to my daily, looking for the same check marks. 150 above 200, that's good. And now price action making higher highs and higher lows, that's good. Now on the daily, I want price action to pull back below the moving averages. Then I want price action to break above, and then I want my 10 EMA to cross above my 21. Once I get that, I want price action to retest the moving averages, give me a bullish candle. That will be a good swing trade for a profit of $5 in 48 days. Now it can be, you can take your profit earlier or you can just wait, and depends on you. I'm not going to go over take profit and stop losses in this video. This video is just about moving averages. Alright, let's move on to the last example I have for you guys. Ticker symbol BAH. Alright, let's go to the weekly. 150 EMA above my 200 SMA, check. Price action making higher highs and higher lows, check. Then I want price action to be above my short-term moving averages, check. Alright, now I move on to my daily. Price action making higher highs, check. 150 is above my 200, check. Now, I want price action to break below the moving averages. Then I want the 10 EMA to cross above the 21 with price action breaking both moving averages. Come back to retest the moving averages as support. Then I want a bullish candle telling me this is the okay time to go long, which I get here. And this is a very recent trade, November 11, 2019. This is when I would purchase my trade and just wait for it to hit my take profit. Now it can take several days, it could take 2 weeks, 3 weeks, it could take 1 day, but of course this didn't take a day. The trade is still active right now. And that's going to conclude the moving averages strategy that I have for you guys. Now once again, those numbers that I gave you guys, the 10, the 21, the 150, the 200, those are the moving averages that I find to be helpful. Now you can find your own numbers, your own length to apply to the moving averages. You will just have to come up with a system that will give you a really good track record to go by. Once you get those numbers, apply it to the moving averages and stay consistent and strict with your rules that you develop. These are the rules and the guidelines that I gave myself to use, and they are making me consistent in the stock market and profitable. If you find value in this video, give me a thumbs up and leave a comment below. And check out the other videos I have on my channel.